Sometimes a stock that's been beaten down for months just suddenly springs to life. We see this massive green day, and that's exactly what happened with Beyond Meat. It left a whole lot of people asking the same question. Is this the start of a real comeback, or is it just a trap? Today, we're going to dive into the technicals and see if we can find some answers.
So we have to start with a main event, right? The thing that put this stock back on everyone's radar. A single dramatic day of trading that really caught everyone by surprise.
And there it is, a jump of nearly 17% in one day. Now, for a stock like Beyond Meat, which has been in this long, painful downtrend, a move like this is like a massive signal flare. It just forces you to stop and go, whoa, okay, what is going on here? And that, right there, is the big question for this whole explainer. Is this surge the real deal? The start of a genuine turnaround? Or is it something else, a temporary blip, a trap in a much bigger, more negative story? To figure that out, we really need to dig into the conflicting clues the charts are giving us. Okay, so this is where our investigation really kicks off, because the technical data for Beyond Meat, well, it's telling two completely different stories at the exact same time. It's a classic battle, short-term excitement versus long-term pain. So on one side of the scale, you've got the good news, the bull case, a high risk/reward ratio, which hints at some real potential upside, and yeah, a dominant short-term uptrend. But then, weighing all of that down is the bad news. The stock is scraping the bottom near its 52-week low, and its overall technical score is pretty weak. So how do we solve this puzzle? Well, we start by following the money. Price tells you what happened, but volume can tell you why. It shows you the conviction, the real muscle behind a move. Was that big price jump actually backed by a flood of enthusiastic buyers? Or was it something flimsier? This is our first major clue. Now, before we look at the data, we gotta get our heads around this key concept, distribution. Just think of it like this. The smart money, the big institutions, they're quietly selling their shares to the crowd. They don't just dump them all at once and crash the price. No. They sell into these little moments of strength, like that big price jump. It's kind of like they're sneaking out of the party before it's over. So here is where things get really interesting. The volume data for Beyond Meat is flashing some serious red flags. The on-balance volume, which tracks that long-term buying and selling pressure, is deeply negative. The accumulation/distribution oscillator, which looks at the shorter term, also negative. And here's the kicker. That huge 17% price jump happened on below average volume. This is a major plot twist. So the key takeaway here is this. The price surged, but it happened without a real surge in buying conviction. In fact, the data underneath suggests that big investors might have used that very price jump as a chance to sell more shares. That is a huge piece of evidence pointing away from a sustainable recovery. Okay, so the volume story is looking pretty bearish. Let's gather some more evidence now from other technical indicators and see if they back up this theory of underlying weakness. Let's check out the moving averages and see what they tell us. And wow, this slide just lays out the conflict perfectly. You see that one little green signal? The price popped up above its 5-day average. That's our short-term excitement. But just look at the bigger picture. It's still trading below its 20-day average, and it is far, far below the critical 200-day average, which is way up at $3.11. This tells us that the long-term trend is still powerfully, powerfully down. And if you were hoping the momentum indicators would help the bulls out, well, there's not much good news here either. The RSI, a key strength gauge, is just kind of hanging out in neutral. The MACD, another really popular tool, actually shows that the upward push is already getting weaker. And yeah, sure, a couple of indicators were in the oversold zone, which can hint that a bounce is coming, but they do not confirm that a new sustainable uptrend has actually started. So with all this conflicting evidence, where does the stock go from here? This is where we map out the key battlegrounds, the specific price levels that are going to tell us whether the bulls or the bears are winning this fight. These are the lines in the sand. This chart lays it all out for us. So below the current price, we've got a key pivot point at $1.31 and major support at $1.21. If it breaks below that, that would be very negative. And then looking up, the first big test is the resistance level at $1.50. This is the hurdle the bulls absolutely have to clear to keep any hope alive.
So the technical analysis really gives us four potential paths forward. In the bullish scenario, the price smashes through 150 and maybe makes a run for 180. In the bearish scenario, it fails and falls back toward that 131 pivot point. Or, it could just go sideways, trapped in a range. And then there's the most negative scenario where it breaks down below that crucial 121 support and starts heading towards $1. All right, we've looked at the price jump, the conflicting trends, that suspicious volume, and all the key levels. It's time. Let's put it all together and deliver the final verdict from the technical report. And here you have it, straight from the source analysis. This one sentence it perfectly captures the whole dilemma. Yeah, there was a nice little short-term pop, but the overall picture, the weak technicals and that powerful long-term downtrend, it just screams for caution. And this chart, it just nails the final verdict visually. Look, you have one small green positive. That's the short-term trend. But it is just completely dwarfed by two much larger red negatives, the dominant long-term downtrend and those really bearish volume signals we uncovered.
Which brings us all the way back to where we started. Based on this deep dive, that 17% jump, well, it's looking less like the beginning of a comeback story and a lot more like a classic bull trap, designed to lure in buyers while the bigger negative trend remains firmly in charge. So the real question to leave you with is, what's it going to take for that little green bar to finally start growing bigger than the red ones?